Okay, so the financial markets have the potential of having the mother of all crashes. So in this video, I'm going to talk to you about what's going on, what I'm seeing, and why you should be paying attention. And I'm also going to be showing you how you can not only avoid being a victim of this crash, but how you can actually make a lot of money during this time. So what the hell is going on right now in the markets that have me so worried or excited if you know how to take advantage of it? So let's talk about it. This is the Hey Ed YouTube channel. I am your host, moderator, and all-around nice guy, Edward Anderson. And today I've got a very important topic. Now, it is important for me to mention that I'm not a financial advisor, so don't construe anything that I mention in any of my videos as financial advice. Always do your own research before doing anything with your money. But man, oh man. So the stock market was down 800 points on Friday. Today, as I'm recording this, it is Sunday, February 23rd. Now, in addition to Friday having a very ugly day, on Thursday, it also had a very ugly day. Now, I'm about to give you the perspective of someone who worked on Wall Street for a lot of years. I worked as a stockbroker, a trader, and as a trading instructor. So I can give you some insight that you're not going to get from other people. In this video, I'm going to shed a little light on the psychology and the thinking that's going on by the traders on Wall Street and how you should learn to think like them. Okay, so when I was an instructor, the first question I always asked my students to start a class was, someone please tell me what makes a stock go up or down in price. Now remember, back then I was primarily an equities trader, but all these rules apply across all market conditions. And I got the usual responses. Well, earnings and growth and having an industry shifting product or service. Well, that was all wrong. There is only one thing on the face of the earth that makes anything go up or down in value, and that is buying pressure and selling pressure. If there are more buyers than sellers, it goes up. More sellers than buyers, it goes down, period, end of story. And I told them, listen, I don't give a flying squirrel about fundamentals. Earnings, PEs, none of that matters. The only thing that matters is buying and selling. Now, is it useful to know what why people are selling and why people are buying? Yeah, I guess to some degree. But in the end, I see everything inside the chart. So I was a technical guy. I'm a technician. Okay, so when I imparted that message to my students, there was a little bit of a hyperbole there, granted, because I wanted to drive home the point of what really is important if you're going to be trading, if you want to make money on a stock or crypto or real estate or anything for that matter. And that is learning how to read the psychology of the underlying product. And in the financial world, in the world of the stock market and the cryptos and all the rest of it, psychology is everything. All the fundamentals, they're all secondary. But listen, it is useful to know what the underlying concerns are in the market. So I'm going to start with that. I'm going to start by talking about the things that the markets are worried about. Now, there is rarely any one issue that will drive the market in one direction or another. Sometimes there is, if war broke out or something like that. But usually it's a combination, a culmination of a lot of issues that kind of create a tipping point that affects the psychology of the market. So let me go over a few of the major issues right now that's kind of affecting the mood of the markets. And listen, these are in no particular order, okay, because they're all significant, they're all important, but I've got to start somewhere. And the first issue is the idea of inflation. All of a sudden, Wall Street is interested in inflation. All of a sudden, mainstream media is interested, in inflation. Well, where have they been for the past 4 years? But now that Donald Trump is in office, now it's a big deal. Inflation, tariffs turn consumers sour on Trumponomics. Consumer sentiment took a market shift downward in the latest University of Michigan's monthly sentiment survey released Friday as Americans expressed increasing concern about President Donald Trump's proposed import tariffs and continuing inflation. The overall consumer sentiment index for February dropped 9.8% from January to a reading of 64.7, while the index of current conditions fell 12.5% to 65.7. Okay, so in layman's terms, they're saying people are now starting to worry about inflation. I want to drill down a little bit about this notion of inflation. Now, Donald Trump has made a lot of noise about how he wants interest rates to come down. All right, listen, the way you fight inflation is by raising interest rates. That's just the unfortunate reality of the world. That's the way, that's the primary way to fight inflation. And Wall Street likes low interest rates. They like free money. But in a moment here, I'm going to tell you why that is one of the main reasons why we are going to have a crash in this market. But listen, we have spent 4 years, actually, well, decades really, of really poor financial management that have destroyed the buying power of the US dollar. And now most young people don't have a chance in hell of being able to afford a house, for example. The American dream has gone out of reach by, to most Americans. But when you have a patient that is morbidly obese and then goes to the doctor after decades of really bad eating habits and poor exercise habits and says, "Doctor, make me healthy." Well, that's a very tall order. Some very dramatic and painful things are going to have to happen in order to get you healthy. Now that's the same kind of thing that we are going to have to go through as a country if we want to get back to financial stability, to financial health. The financial system is broken. It is beyond repair. Right now, we're just managing the length of the death of the system. But these big sweeping changes that Donald Trump is doing, although I love to see them, it's not going to be enough. There is going to be pain. Inflation is going to be coming. Hyperinflation is going to be coming. But listen, I am convinced that relatively soon, we're going to see a massive stock market crash that's going to make 2008 look like a picnic. And it won't just be the stock market. It's going to be cryptos. It's going to be real estate. It's going to be anything you can think of. There are three things that you can count on going up dramatically during that time. The first one is inflation. The other two are gold and silver. Now, I've been talking a lot about gold lately, and I'll talk about it a little bit more, later in this video. But let's go back to some other issues that's at top of mind on Wall Street. The next issue of concern to Wall Street is the idea of the housing market. Now, this is a very underreported story. During that worldwide flu that we had there for a couple of years, I can't say the name because the algorithm will pick it up, but during that worldwide flu, the VA and the government in general put a ban on foreclosures. But those bans are being lifted, and foreclosures are spiking to dramatic levels. So a lot of people who could not meet their mortgage payments, they got a holiday there for a few years. Well, now the party is over for them, and they're being foreclosed on and kicked out of their houses at very dramatic rates. So the street is going to be flooded now with houses that have been foreclosed on. That is going to be a spectacular opportunity out there for people who've been looking to buy a house, but they couldn't afford it. Just be a little patient. You're going to get a chance to buy houses at very steep discounts from here. Now, if you're going to say, well, Ed, that's not very nice to make money off of, other people's misery. Hey, listen, these people did it to themselves. I'm sorry, but if you couldn't afford to buy a house, if you couldn't afford the payments, you shouldn't have bought the damn house. And the people who are financially responsible, they did the right things. They should be rewarded for that. But I'm not going to preach, okay? So I just want to make the point that the housing market is a very important element to my worries about this market. I think that the bubble is going to burst, and we're going to see a lot of carnage in the real estate space. Well, carnage / opportunity, right? Depending on which side you're on, depending on whether you're prepared or not. Now, the next issue that we have to worry about is the global debt issue. There are a lot of countries out there like us who have enormous national debt that they have to service and they can't afford to service. And the only way to solve that issue is to either default on those bonds or raise taxes. And both of those solutions are going to involve a lot of pain. I mean, in case you have forgotten, our national debt here in the United States is so huge that we increase our national debt by $1 trillion every 3 months now, just because we're spending more money right now just servicing our debt than we are on any other budget item other than defense. Defense is number one. The other one is servicing our national debt, just to pay the interest, not pay down our debt, just to pay the interest on our debt. So our national debt issue is unsolvable. It cannot be fixed. And now we turn from the government debt issues to personal debt issues. 5 months ago, we hit a record level in personal credit card debt. That's the first time that has happened. And most people these days are not using their credit cards in order to buy luxury items. They're tapping their credit cards to meet basic needs like groceries. Okay, so those issues and more, but I want to respect your time here, are all converging right now to turn the tide in the market. So let's take a look at what's going on right now in the markets, and then we'll zoom out and take a look at what a possible sell-off could look like. And then I'm going to tell you how you can make money on it. Okay, so this is a chart of the Dow Jones Industrial Average. You'll see that on Friday it was down, well, not 800 points, 748 points. Now, this is the 1 month chart. So to get an idea of what's really going on, we need to scale out a little bit. So let's look at the 3 month chart. But now we see that a double top has definitely been formed. You can just draw a line along those two peaks. So even though Friday was a very ugly day, we are still very close to the highs. So I'm calling this early. But let's scale out a little bit more. Let's go to the 1 year. Okay, now we have some important technical information. If we draw a line here along these, what I call V's, you can see that the momentum has just been broken. So we've got the double top combined with that bottom momentum line. You can see the downside risk is very dramatic. It's got small support at 42,000. The next major support is at 39,000. And after that, we have to go back further to see where the next support level is. So let's look at the 2 year chart. The real potential downside move is down here around 32,000. I do not think it would be very difficult to get to 32,000. It would not get there in a day, but I think that's what you have to look forward to if the bear market really kicks in. And I am, as of Friday, an official bear on this market. Now, while we're here, let's talk a little bit about why the markets have been up during this 2 year period so dramatically. This was a sugar high rally. This was a manufactured rally. Let's be clear about this, okay? The rally that the market has enjoyed for the past 2 years has been artificial. It was created by the Federal Reserve, creating a low interest rate environment artificially. At a time when inflation was going up, they were keeping interest rates the same or even cutting interest rates. That's not the way you fight inflation. But Wall Street wanted the cheap rates, and Jerome Powell and the Federal Reserve, they are puppets of the certain big guys on Wall Street. And that's been going on for a long time. So the market has become addicted to cheap money. But that process of attempting to right the financial ship is going to be a very painful one. We're going to see a lot of downside some of the air has to come out of this balloon. And there is a mathematical way of measuring the bubble that we are currently in. Okay, so here's an article discussing why Warren Buffett is holding $325 billion in cash. He has the largest cash position, I think, ever in his history in his portfolio. So for those of you who like Warren Buffett, he's going to cash. So if he's going to cash, why aren't you? Well, let's look further down in this article. Warren Buffett's Berkshire Hathaway Inc. has amassed the largest pile of cash ever held by a public company. At $325 billion, Berkshire Hathaway's war chest is more than the combined cash reserves of Apple, Microsoft, Google, Amazon, and NVIDIA. But let's look further down in this article. Now, I promise you, this is what Warren is looking at. This is the PE ratio of the S&P 500. And this goes back 2 years. And look at the tear that the PE ratio has been on. And now it's just starting to roll over. Let's take a look at Walmart. Okay, so Walmart. Wow, look what happened. Man, let's take a little closer look. Let's take a look. Let's go to the 1 month chart. Look at what it did. In 2 days, it went from 104 down to 94. Listen, for a massive company like Walmart, that's significant. I want to look at one more here. United Health Group. Wow, look at that. Gap down. It did try to recover, but too much damage is done here. This thing is going to roll over and go down more. Now, the reason why I wanted to show you those last two stocks, Walmart and United Health, is because companies like this, they are generals. Okay, now when you have the Magnificent Seven, largely responsible for the great move in the stock market over the past several years, and they roll over, man, they could lead the markets down in a very dramatic way. Now, I know I've been talking a lot about the stock market, but listen, this is also going to bleed over to the crypto space, okay? The crypto industry is tiny in comparison to the stock market. Tiny, which means it's more vulnerable and it's more volatile. When people get scared, okay, the first thing they sell are their riskiest investments, and those are cryptos, right? So you could see cryptos lead the way down. Now, I do think the real big generals there, like Bitcoin and XRP, they're relatively, I wouldn't say immune, but they're not going to go down dramatically as pretty much everything else. But when you have a crash in the stock market, everything's going to be sucked. This gravitational pull is going to take everything along for the ride because of the three emotions that drive the markets, those three emotions being fear, complacency, and greed. Of those, by far the most dominant emotion is fear. Now, this market crash is not going to happen in one day. Okay, it's going to be a slow rolling car crash. Okay, I promise you that along the way we are going to have very impressive rally attempts. It's going to have, that's the way the markets work. I'm not going to go into why here because again, I want to respect your time. But just know that that's going to happen for the foreseeable future. This is what's going to be known as a trader's market, not an investor's market. Now, the difference between traders can make money in any kind of a market because they know what they're doing. Traders love volatility. For a good trader, volatility is his best friend. For investors, you're going to be really frustrated because you're going to have days of pain followed by days of relief, and you think everything's okay, and then you're going to get slammed in the face again. This is going to be the way of the world for, I think, the foreseeable future. So if you're a trader, you're going to be in heaven. If you're an investor, you're going to be frustrated. If you're an investor, you might want to think really hard about putting your money to cash, or even better yet, buy some gold and silver. Now remember, when I say buy gold and silver, you're not really buying anything, right? What you're doing, you're converting your assets from a really lousy asset, like fiat currencies that have a guaranteed loss in your money. You're losing value on it every day, courtesy of inflation. But with gold and silver, you can preserve that buying power. So you're not buying anything. You're converting your assets from a bad asset to a solid asset. Not only will these maintain their values, but in that kind of environment, they're going to actually go up in value. Now, another thing you can do is learn how to trade, be a trader. Now, most people don't have the time to trade, or they don't have the discipline to trade. So, I would recommend, find a trader that you can copy. And I have a program that you can do that. And I've alluded to it in a few other videos. If you want to learn how to do that, I can't mention that company in a YouTube video because there are rules against it. But if you reach out to me, and if you want to join the Hey Ed WhatsApp group and attend my Zoom calls, you can learn about this program where you can open up your own brokerage firm, deposit your money, and then link your account to a successful trader. And then every time he does a trade is also done in your account. You're not turning your money over to anyone, okay? The money stays in your name, in your account, but you're just copying the trades of that other trader. Find a good trader and let him do the work. Okay, so there's a lot more that I want to say, on this topic, but I think the videos are already gone too long for the average, YouTube consumer. Again, if you'd like to join the Hey Ed WhatsApp community, shoot me an email and I'll send you a link to join the group. So when the markets go to hell in a handbasket, you do not need to be a victim. You can take advantage of it and actually, profit. Okay, so you do not have to be a victim in the upcoming financial crisis. You can actually, profit from it. And there's nothing wrong with that. You should do it. You deserve it. So join the Hey Ed WhatsApp community, either by hitting that subscribe button or better yet, joining the Hey Ed WhatsApp group. And we will find ways for you to crush it in the upcoming calamity. Please help me push out this video. Please help me with the algorithm by hitting that like button and the subscribe button. Ed Anderson, live from Minnesota, signing out.
Copy that.